some of the tariffs we're imposing now were pretty dang severe. But let's focus for a moment on the potential upsides. Academy Securities suggests that Donald Trump doesn't care about the stock market right now because he parrots what people like Chamath say, who's also close to the administration, that the top 10% of households own 88% of equities. Therefore, it doesn't matter that the stock market falls. And the Academy Securities suggests that the end is that you use tariffs to buy and spend on U.S. manufacturing, U.S. jobs, and building infrastructure. See, in their ideal case, companies end up taking in the margin the price of tariffs. Whether it's the exporter or the importer, they end up taking in the margin the cost of tariffs. Another reason the stock market would go down. This, however, would leave the buyer's price, your price for, say, an iPhone or whatever, the same or close to the same. Certainly not up 40% like some of the tariff levels that we've seen. Otherwise, people just wouldn't buy the devices anymore. But anyway, the idea would be that the price for consumers would remain the same, and the price that is basically earned by companies goes down, and the difference in the middle here is money that the United States can raise in the form of tax revenue to then fiscally spend on things like manufacturers, jobs, incentives for manufacturing in America, tax credits, tax cuts, whatever. That's the goal or sort of the vision. Academy Securities makes it very clear here that Donald Trump is doing a, quote, phenomenal job of pushing the world away from us. Now that's somewhat dangerous. See, the Wall Street Journal suggests that this has been happening longer than we've even been paying attention to it. At the beginning of this Trump administration in January, China tried to pre-negotiate tariff resolutions with the United States before we got to an all-on trade war. But according to the Wall Street Journal, China, quote, found only closed doors. There's a suggestion that China had previously worked with Jared Kushner through channels to connect to Donald Trump to work out deals in private, essentially, before publicly engaging in trade wars. This time they've tried to do it through Elon Musk because of its exposure to Giga Shanghai, but so far nothing has worked to get Beijing a channel to negotiate with China. This suggests that the door is pretty damn well closed. Now, why would that be? If it truly is that Donald Trump wants to negotiate with these other countries, why is the door to negotiate closed? Is this just part of chaos theory? Or is it because if Donald Trump actually negotiates free trade deals, we won't end up getting the jobs or the manufacturing in America that Donald Trump is hoping for? Something else to keep in mind right now is there's a chart showing investment grade spreads versus, basically history when there is a recession. And this is a quite interesting chart because if you look closely at this, you could see that valuations are, quote, nowhere close to prior recessionary peaks. This would be your investment grade spread here. The higher the number goes, the more risk is priced into the market. And the same is true for your lower credit quality, your high yield spreads over here, like your triple Bs. Ignore those titles, they're a little confusing. But what you should look at is right here, April 2025, investment grade yields are at 102. Well, in 2016, we were twice that. In 2008, we were 6 times that. In the dot-com bubble, we were twice that. You get the idea. And in high yield credits, we were twice that in 2016. We were 7-ish times that in 2008. We were also about 2 times that in 2001. So you can see where really valuations are, quote, nowhere close to prior recessionary peaks. Now, in fairness, corporate balance sheets remain very, stable, very strong, which is good because it actually suggests that companies maybe do have the ability to take it in the margin, so to speak, in terms of some of these new tariffs. However, just keep in mind, once the S&P 500 goes into a bear market, it's relatively rare for you not to have a recession. It has happened in the past. It happened with a Black Monday in 1987. It happened in 22. It happened in 66. But it usually doesn't. When the stock markets go into bear market, like in 29, 37, 46, 57, 61, 73, 80, 2000, 2007, and 2020, you usually end up into a recession. A non-recessionary bear market could be an S&P 500 drop of 22 to 34%. A recessionary bear market could be declines of 40 to 50%, which means the declines we've seen so far could just be the beginning of the declines. Now, who knows? I mean, again, it doesn't matter really what happens over the next few days. What matters is what is the direction of where we go over the next months. And so far, it seems like Donald Trump is purposefully at a golf tournament this weekend to signal that he's not really interested in negotiating. He's actually interested in truly rebuilding America's manufacturing via tariffs, suggesting that oil demand usually falls to zero in a recession, at least oil demand growth. And frankly, the longer these tariffs stay, the more oil demand problems we end up facing. This could be why oil is selling off. Some people also suggest that gold is a safe haven asset, but when you go into a recession, gold does usually fall, and that may be because valuations fall so much in other assets that people use gold to sort of cover. But take a look at this. I find this interesting too. This just shows you a chart in blue of the reciprocal tariffs that we have imposed relative to some of the other tariffs that we've imposed in the past. And you can just see how much larger they are compared to previous tariff announcements, like the 2018 trade war with China over here in pink. Nothing compared to what we've seen since. So anyway, this gives you a little bit of a catch up on what's going on